Friends, the 47th GST Council meeting has just concluded a few hours back after a marathon of 2 days, yesterday and today. The one fact which signatured this GST Council meeting was increase in GST rates of goods as well as services across sectors. Primarily, the GST 47th Council meeting was revolving across 4 reports by 4 group of ministers. First, the group of ministers on rate rationalization, which was discussed in detail, wherein there were rate increases to correct inverted duty structure, a lot of exemptions to many goods and services have been withdrawn, and certain rate on few pharma articles have been reduced. The second was the group of ministers report on taxability of casinos, betting, horse racing, etc. They were given 15 days time more, and the next GST Council in August 2022 would discuss the final taxability on these items. However, it is very important that the GST Council in principle has agreed to the fact that whether it be online gaming of betting, casinos, horse racing, they are a form of gambling, and therefore the taxability would be accordingly. The third group of ministers was on technology related issues, wherein various recommendations have been taken and they have been asked to work further on IT and technology related tools. A major recommendation which has been accepted and which would be implemented is granting of GST registration on a risk-based model, whereby IT tools would help to identify whether it is a risky party which is being registered and which requires a lot of scrutiny or not. And the last group of ministers report which was discussed was intrastate movement of precious metals like gold, etc., wherein it has been decided by the GST Council that the rules related to movement of precious metals like taking the driver's Aadhaar card, e-way bills, etc. would be decided by the respective states. All the notifications and circulars relating to the GST Council's meeting would see light of day on 17th of July 2022, and therefore whichever industries have been impacted by rate increases, etc., have to gear up their systems in a manner that from 17th July 2022 they should implement the rate changes, because chances are very high that notifications would come out on that day. It is difficult to discuss the entire minutes or the press release which has come of the GST Council in a 10-15 minute video, and therefore we have kept a webinar tomorrow. You can register on it at www.taxconnect.co.in, where we would be discussing threadbare the analysis of the GST Council's meeting. Herein, I would be discussing few important aspects which would be important for industry as a whole. First and foremost, with respect to compliances, GSTR 3B would go through a complete revamp. It was reported by the media yesterday that the council is proposing to amend GSTR 3B in a manner so that the respective GSTR 3Bs can be amended, and Circular 26, which required one 3B to be amended by other 3B, that would now be put to rest. It is important that the apex court in the case of Bharti Airtel had even upheld that the amending of one 3B by another 3B was constitutionally valid under section 39 of the CGST Act, yet the council feels that it is the right step to allow GSTR 3Bs to be amended. It would be a great ease of compliance for industry because it becomes difficult to reconcile wherein one GSTR 3B is amended by the next or subsequent GSTR 3Bs. Another important decision which was taken is regarding risky exporters, wherein certain exporters are tagged as risky exporters by the DGARM, and finally the DGARM, even after the entire analysis is given by the commissionerates, they do not know how to untag it due to certain procedural issues at the DGARM. Now this council meeting has recommended that irrespective of whether the risky exporters is untagged, and based on certain criteria, the refunds would be granted to these exporters so that their capital is not blocked. We all know that thousands of these risky exporters had gone to the high courts, wherein after appeal to the high court, the risky exporters tag was untagged. Next important issue is the ITC reversal with respect to sale of MEIS scripts, etc. Rule 43(1) would be amended whereby there would be no requirement of reversal of input tax credit on sale of MEIS scripts. If these are not amended, then as of now what this rule stands is that at least the common input tax credit should be reversed on account of sale of MEIS and other duty credit scripts. Friends, another important thing which was discussed is that the blocked or ineligible credits need to be reported in the GSTR 3B. Now, non-reporting of ineligible credit is creating a lot of problems for the GST devolvement between the various states and the center. So it is important that taxpayers in table 4D of GSTR 3B disclose the ineligible credit also. Another important amendment is regarding recredit of an amount which was found to be ineligible for refunds but has been paid by the exporter with interest and requisite penalties. The issue was that even after payment of the ineligible refunds, the ITC ledger which was debited, that was not getting recredited. Now, through form PMT 3A, this recredit shall be done. Many rate changes have happened as I have discussed, but there are few important clarifications on the rates and few rate changes which are important for all businesses. First is that GTAs as of now have the option to either go with ITC at 12% GST or to go on reverse charge basis, wherein the recipients would pay on reverse charge. However, one understands that if the recipients pays for the GTA services availed on reverse charge basis, then ITC would not be eligible to the GTAs. In a very important decision, it seems that the GST Council has proposed that the GTAs themselves at the beginning of the financial year should be given an option to either choose 12% or 5% on forward charge basis, that is with ITC, so that there is no loss of input tax credit and the benefit of input tax credit can be passed on. However, the fine prints of this amendment needs to be seen as the circular is issued or the notification is issued with this effect. A clarification which would be coming out on ice cream parlors who have sold the ice creams at 5% or other rate of duty before 5th of October 2021, when the circular clarifying that the higher rate of duty would be eligible for ice cream sold by ice cream parlors. So in these cases, to settle the disputes and prevent litigation, such low rate of payment by ice cream parlors would be regularized. Another important clarification which would come is on fly ash bricks, wherein there would be no criteria of the ash content in fly ash bricks to be 90% or more to claim a lower rate of GST. That would be clarified by a circular going forward. With respect to rate changes, we all know that hospitals with a room tariff of more than 5,000 per day would now be liable to GST at 5%, and that is without ITC. Hotels, even with a tariff of less than rupees 1,000 now, would be liable to GST at the rate of 12%, of course with ITC. One very important amendment which is proposed is with respect to sale of branded food grain. Now, as of now, in case of branded food grain, a GST rate of 5% is applicable. However, if there is a mark which is not in the nature of brand and the supplier forgoes the actionable claim on the brand, then such GST rate is exempt. Now this brand would be replaced by the words packaged and labeled. So even if a food grain is sold in a packaged and labeled pack, it would be liable to GST at 5%. Only food grains and such other items like cereals, etc., are sold loose without a packaging and labeling, only then they would be exempt from GST. Now this would require detailed clarification because there would be questions in this regard, as to what would be considered as labeling, whether a food grain which is to be otherwise sold loose, even if that is packed just for the purpose of transportation and labeled by the name of the company, would that be also liable to GST or not? Very many clarifications are required in this aspect, which would be coming going forward. The GST rate of diamonds and precious stones has again been increased from 0.25 to 1.5%, possibly due to the public opinion on such rate reduction earlier. Various changes to correct inverted duty structure have been done. For example, the list is very long, as I said, but important ones is on printing ink, LED lamps, solar water heater, where GST rates have been increased. In fact, to correct inverted duty structure across board, GST rates have been increased and not reduced. Also, services supplied to government and authorities by way of works contract for building canals, bridges, railways, metros would also be hiked. The GST rate would be increased from 5 to 12 or 18% as the case may be. So friends, all of these amendments shall see light of day on 17th of July 2022. You can attend our webinar tomorrow at 2 p.m. You can register it at www.taxconnect.co.in, wherein we will discuss threadbare the entire analysis of this GST Council meeting. Please do keep on viewing this channel and liking and sharing it. So till tomorrow, thank you and good night.